Good everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday, the 30th of April 2022. And this is the weekly technical analysis for spot gold and dollar yen for the first week of May. Let's begin with spot gold, where it did drop lower, dipped down to hit the previous lower channel trend line before bouncing back up on Thursday and attempted to recover on Friday, but then closed back into the support zone that we have highlighted here from just around the 1900 to the 1891 support zone of the 62 FIB retracement. So this is a key support level now, and let's change this to intermediate support zone. Let's bring the next key support level to be just at the 200 EMA, and below that there's the 1850.00, and further below that is the 21 or 78 FIB retracement of this swing move up. So that's going to be a next critical support zone. This area now at the 1950 and the 38 FIB retracement is next key resistance zone. And let's remove this one up here for now. Okay, and this actually did find some support from this previous swing high up here. So as the US dollar continued to strengthen, there was a dip for the spot gold, but it did not drop further lower as compared to the other major pairs. If you take a look at my other videos. And for now, it's consolidating in this range. We'll see if next week it's going to dip lower as the FOMC meets, and expected to increase rate by higher quantum at 50 basis points, and this could continue for the next 3 months. It could be as an aggressive catch-up plan, fight against inflation. So we'll see what impact that has on the this precious metal here. And for now, there is a resistance also at the daily 55, where it did attempt to recover above, but failed and was rejected. So this zone actually could also be the 50% FIB. It's also a resistance zone. Let's bring this down here, and this as an intermediate resistance. All right, so the US, there's definitely the key news will be the Federal Reserve meeting and their rate and policy decisions. And on top of that, towards the end of the week, there's the non-farm payroll report. So another key indicator for the economy. So we'll see how the US dollar responds and reacts to all these news coming up next week. Right, and we'll see how the US dollar was behaving and where it ended up at the end of the week. The US dollar index, the DXY. Right, let's switch over and take a look at that. Here's the US dollar index, the DXY, and you can see that it rallied right from the start of the week, right through the resistance zone at this 262 FIB extension, past the 102 level, and ran up all the way to test the previous high. Go to the weekly, that's the high of 2020 at the 103.80 level, and tested there exactly. Right, it's at 103.80 before Friday pullback, and did not engulf the previous day's candle, so it could still be a continuation move next week, but we'll see how long this pause is going to be, or whether it's going to be a significant retracement. So this resistance zone is clearly up here now at 103.80, and there is a support zone at the 102 and 262 FIB. Okay, and this next support zone is going to be at the 200 FIB. Let's remove this for now. And yeah, let's move this up to the 100 level, because that's where the bounce back up, and this was triggered from the Fed chair statement during the IMF meetings, and that's where it continued to rally all the way until last Thursday, and that was from the previous week, and where he already highlighted that they may need to increase the quantum of the interest rate to the 50 basis points for 3 consecutive months. So since then, that has rallied all the way up, and this on the weekly time frame. Let's see if there's still a bit more bullish sentiment for the first half of next week until the FOMC, and once the Federal Reserve confirms and announces their interest rate increase, then we could see a significant retracement. So possible buy the rumor, sell the news scenario. Okay. Yeah, let's leave it at that for now. It's a really overextended move now. Okay, let's move back to the other pairs. All right, moving on to dollar yen, and it has after a slight pullback, it has rallied back up through the resistance zones, through the key 130 round figure, and all the way to hit the 262 FIB extension, just slightly above the 131.00. This was supported with the BOJ not being hawkish at all, and because of that, the dollar took over and continued to rally higher, and that was on Thursday, and easily punched through the 103, 130 level. Let's move this to this next level here at the 262 fib, and that was at 131.27, and that high was at 131.25, so just a couple of pips, just within a couple of pips here. All right. This level here would now be 129. It's going to be interim support. This zone will now be key support where it started to turn around and bounce back up. So from the 127 to the 162 fib extension. Now, is it possible that it could continue higher? Let's take a look at the weekly time frame. And this is a large spinning top here. Long wicks on either side. Let's move on to monthly time frame. And yes, it's still possible to continue pushing back up and test the highs of 2001. Okay, moving back to daily time frame. If we do take a continuation move here, could go all the way back up to that high. That's where the 200 fib extension is. So we'll see. So next week already, the FOMC meeting already on track to increase rates by another 50 basis points. So we'll see how bullish this dollar is going to be against the Japanese yen. All right. So do watch out for my other videos on the other major pairs. Have a safe week and a good trading week, and cheers for now.